All right, we're live. So welcome back to Dapp University. So today we're going to look at an update on the U.S. infrastructure bill that's being formed right now and what it's got to say about the crypto industry inside the United States. All right, we've talked about this on these live streams we do Monday through Friday on this channel over the past several days, because this is a critical point for America and particularly the crypto industry as a whole. And so we're going to look at that today. We're going to look at the cryptocurrency prices. We're going to look at a lot of other news updates that have happened in this space since we did our live stream on Friday. Answer some of your questions and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to become a blockchain master step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping in the chat here. We've got Culture Highs, Automatic Beats, Gabriel, Wendy, Anthony, Rodrigo, Jeremy, Kaiser, Wayne. Welcome. All right, so let's go ahead and jump into this. So U.S. infrastructure bill update. All right, so things as they stand right now do not look great for crypto. Okay, so I'm going to talk about that. I don't think this is like a game over type of situation for crypto or anything like that, but there's a lot of stuff you need to really understand. So just catching you back up on the whole infrastructure drama if you're just tuning into this conversation now and don't really understand what this is about. So basically, there's a bill, in process right now inside the United States. If you're not in the U.S., basically how it works is, we're passing these bills. They have to go through several steps in the government. They have to get voted upon. There's lots of back and forth disagreement, which happened this past weekend, around a particular infrastructure package for the United States, okay? And so what's really common in these types of situations is for these bills to be created with a certain goal in mind, and then all this other stuff just gets included kind of last minute under the radar that doesn't really have a lot to do with the bill, but basically, serves somebody's agenda or something like that, right? And it gets thrown in there, and then basically they have a bigger agenda which they're trying to pass, which is this infrastructure bill, and then you can usually have some collateral damage from something else that's not really that related. That's kind of an all nothing type situation that's trying to get pushed through. So that's kind of what's happened with this. Basically, we've had this infrastructure bill in place. We had some language about crypto regulations that were just kind of thrown in there that were kind of holding up this process. So what's the real issue here? Well, basically, they've tried to define, what a broker is inside of crypto. I won't belabor the entire explanation because I've talked about it a ton on these live streams. You can go back and rewatch that. But essentially, they've tried to redefine who a broker is to broadly include, lots of different people in crypto, like validators, miners, people who are, creating smart contracts on the network, people minting NFTs, all this type of stuff, saying they basically have to issue 1099s, they have to KYC people. And I don't think that necessarily the intent of the language is they're designed to try to force all these people to do that type of situation, but the language is so broad where it could be enforced where those people have to do that type of thing. So really, it's basically saying a bunch of people who are brokers who need to be held to the same responsibilities as cryptocurrency exchanges who aren't brokers, clearly, all that type of stuff. So we've seen a lot of back and forth about this over the weekend. They were in session Saturday and Sunday talking about this. We've seen some amendments to the bill to try to narrow the language of who actually should be responsible for know your customer compliance type things, and also the 1099s, right? So basically, we've had Senator Cynthia Lummis and others basically put forward some amendments to try to narrow who is responsible for that, okay? And so basically, we've seen some back and forth where there's basically that party plus another party have been kind of trying to say, well, this is who should get it, this is who should get it. And the current status is we've kind of been taking 3 steps forward and 2 steps back. And so I'm actually going to pull up a tweet here from Cynthia Lummis. And so she's saying, update, we're in a hurry up and wait mode. We continue to push for a vote. I feel very good about the Wyden-Lummis-Tummy Amendment passage if we can get a vote. All right, thanks to you all. But she's discouraged about our ability to get a vote on it or any additional amendment, max pressure. Okay, so this is a pretty critical moment. And so I pulled up my Twitter over the weekend that Senator Ted Cruz jumped jumped in and basically started advocating for crypto. And I said, basically, regardless of how you feel about tech gurus, I know people are in different places on the political spectrum, and he can be kind of a polarizing figure depending on where you fall on that. I said, regardless of how you feel about him, take note that he's making a lot of noise and he's really jumping in to advocate for crypto. So he's actually got an update on the bill that I'll read here in a minute. But basically, he jumped in and said the Senate is on the verge of passing legislation that would be terrible for cryptocurrency. So he actually retweeted Jake Chervinsky, who we've been talking about on this channel, has had some pretty good things. He had some pretty good explanations of what's been going on here. He said the infrastructure deal contains dangerous provisions that would devastate crypto and blockchain innovation. Supporters of crypto need to make their voices heard. So right now, supporters of crypto and blockchain are losing this fight that will define crypto's future. So that's why I'm proud to sponsor the amendment that we're talking about here. It's a major improvement over what's in the underlying bill and a must-pass amendment. So given the major flaws in the underlying bill's unworkable and devastating crypto provision, I also filed a separate amendment, this is important, to strike the whole thing if a bipartisan deal can't be reached. So we have to act to stop this. So he jumped in, was really advocating for crypto, pushing for this over this past weekend. But we do see an update from Ted Cruz last night, okay, basically saying that, as things stand, just like Senator Lummis was saying here, these things don't look so good. So let me just pull up this latest tweet. All right, let me just find it. Hold on. So he's saying crypto got screwed tonight. There's a partisan disagreement on spending, so Democrats objected to all further amendments. So that means no vote on the Wyden-Lummis amendment that we're talking about here to try to alleviate some of these requirements to lessen the damage and this bill will do to crypto, and a no vote on the Cruz amendment to basically scrap the whole thing if they couldn't, reach a bipartisan agreement. So the result, basically, the Senate's going to inflict billions of dollars of damage on the growing and exciting crypto industry and drive much of it overseas. So there aren't 5 senators who understand much of anything about crypto. So what the Senate said tonight, let's tax the hell out of something we know nothing about so we can pass a giant bill we haven't read and spend the American people's money on stuff they can't afford. It's reckless and harmful. So that's where everything stands now. We do not have finality on this, but that's the current state. If we can basically, get a vote on this, like Senator Lummis is saying here, let me just pull it up. If we can get a vote, then it's good on the amendment that we proposed, but she's discouraged about the ability to get a vote. Just talking about, some cause and effect on, if this ends up moving forward as is, or if we can actually get a vote and get some of this in a with more favorable language, what's going to happen. So let's start off with basically, if we can't get a vote on it, can't get the language change, and it just passes as is, like how bad will that be for crypto? So what's the cause and effect here? And so if you're not American, I know about 50% of people watching these, the channel is not based in the United States. So I realize not everybody wants to know about U.S. politics, but it does have a pretty big impact on what's going to happen with the crypto industry. And there's a lot of funding coming from the United States. U.S. is a pretty big part of this whole equation. So, but still about 50% of people watching this are from the United States. So it's relevant and important to them. It's what I talk about so much. So basically, like Ted Cruz is saying here, if this passes, it's going to keep a lot of innovation outside the United States. It's going to push a lot of this offshore, okay? It's also going to push a lot of it underground, all right? So basically, this is really what is common whenever you kind of crack down on something like this and ban it. And I don't think the spirit of the law necessarily is to try to just outright ban stuff. It's the fact that the law has created circumstances which make it impossible for certain people to comply. So, for example, if you were to mint an NFT, for example, you might, be considered a broker or something like that. So why that, I don't think they're trying to keep you from doing that, but it's just as the language of the law is written, you could be considered that. Okay. So anyways, I think it's going to push a lot of this offshore, right? It's also going to create black markets. That's typically what happens when you create these kind of crackdowns. Is it doesn't actually accomplish the thing the law intends to. It just creates side effects that creates an entirely new situation entirely. So that's the first thought. And so a natural question a lot of you will have is, some people have been talking about the language making it impossible for, the requiring developers who create protocols and contribute to them to be considered as brokers as well. So do they have to essentially, issue 1099s? Or are they in a situation where they can't actually build applications anymore because, they now fall into this strange requirement to be classified as a broker? So all I'll say is this: I don't think it's going to completely remove developer talent from the United States, or basically say if you live in the United States, you can't be like a crypto developer or anything like that. I think what's going to be really common is essentially we're going to see, people operating in multiple jurisdictions. So what do I mean by that? Well, essentially, it's one thing to build something. It's another thing to run something. So if you're a developer, it's not saying it's not illegal for you to create applications. It would basically say that, you couldn't, there's one thing to develop an application, another thing to deploy it. All right. So you might work for a company that has some sort of team that deploys the applications and you're doing a lot of development on it. That could be a side effect of something like this. We're already seeing this thing in crypto where essentially you have a protocol that's separate from the entity that creates it, right? Like you have, Uniswap Labs, for example, is different from the Uniswap protocol, right? So there's all this type of stuff where you could have this kind of separation here that could still accommodate what the law says. So those are some initial thoughts, right? So the final thing I'll say is this. We talked about basically, let's see, here's my stream frozen. I think it's good. We talked about this on Friday, which is basically if this passes, it's not necessarily a game over either. And doesn't necessarily mean that this is the final ruling on crypto. We could, this is the type of thing that could still be pursued further, even beyond this bill, to change the law through multiple different processes and means, and that whatever happens with this, let's say the language as it stands passes, is not the final say. It just means that that's the current status. And the other thing is that these things likely won't go into effect until probably 2023 around crypto. At least that's the latest that I've been hearing. So don't quote me on that. It's not a final fact necessarily. But it would take a while for these things to go into effect, and that means also that there would be some time to get it changed, all right? So I don't think it's a final death nail or anything like that, but it is, as it stands, does not look great. It creates a lot of extra burdensome regulation around crypto. It'll stifle a lot of things, but I don't think it's the end of the world. So one thing that is positive, well, let me know, first of all, before we get into the positives, though, let me know what y'all think in the chat below. So one thing that's positive is, we're still seeing a good amount of bullish sentiment around crypto, despite what's been happening with the bill, with all the politics at play here. All right, we can actually check on. It's been kind of going on with crypto prices. Crypto has been strong over the weekend, regardless of the voting in the Senate. Right, Bitcoin, we're back above $45,000. Ether, we're on a run towards $3,200 as well. Crypto is strong regardless. So actually, when I look at a price update, because we've been talking about this, and sort of my updated perspective on the markets here. So the thing that I'm really excited about now is that Bitcoin is establishing itself above all of its long-term moving averages, okay? Well, hold on a second here. My trading view just messed up. Bitcoin's establishing itself above all these long-term moving averages, which is a really bullish sign, all right? So basically, I'm leaning a lot more bullish than I was, a couple weeks ago. Um, there's still always a chance that we could see a correction beyond this, but I'm leaning way more bullish than I was weeks ago. Okay, because what I've been saying is basically I want to see a reversal in these moving averages. Check, that's happened. I want to see breakout above these downtrends where we're actually making higher lows and lower highs. Check, that's happened. And then the last thing is reclaiming this final moving average here. Okay. So now the real test is, will we get above this and actually start using it as a support? Now, if we do that, that's when it's really hard to be bearish at all. So I'm bullish on most of my mental sort of checks here, my heuristics. But the final sort of boss here is, can we actually start using some of these longer-term moving averages as support? That would be my final bullish sentiment. So ETH USD as well. Yeah, Ether's looking great. I put out a tweet on Friday saying, could ETH hit $3,000 this weekend? And it hit it in like a matter of hours after I posted the tweet. So maybe I'll do that again. Maybe I'll up the target for $3,500, $4,000. So it looks like for EIP 1559, of course, it was not a buy the rumor, sell the news situation, which is something we had talked about. Where we basically see people accumulating ETH ahead of time and then dumping it as soon as it went live. That did not look like the case. So we can actually check on how much ETH has been burnt so far. So again, the EIP 1559 network upgrade went live last week. We've been talking about that for months on this channel. This is the new upgrade where new Ether is getting burned whenever new transactions are created on the blockchain. Basically, your fee gets split up into two parts, the base fee and the miner tip. And the base fee essentially gets, boom, erased from the network whenever you create it, or whenever you pay it. And we've seen this perfect storm of this going live, and then NFTs going absolutely nuts, where people are just trying to catch up grab these NFTs as they're being minted, all right, and buy them as soon as the price explodes, and lots of just activity on top of the Ethereum network that we've been burning tons of ETH, all right. We've actually had lots of deflationary blocks. So I don't see any deflationary blocks here, but we've seen some blocks where it's like 4, 5, 6, 7, 8, 9, 10 ETH per block. And those are cases where the blocks are very deflationary. So what do I mean by that? So basically, new ETH is created whenever blocks are mined. That's how it works. So if you're a miner on Ethereum right now, you get paid two ways. Basically, you get paid by my transaction fee, or at least part of it. And you also get paid because the blockchain creates new Ether. And so ETH isn't necessarily deflationary by design, by nature now, but it's deflationary if enough people use it. So basically, if you use more than about 2 ETH per block in fees, then more ETH is burned that block than is created, okay? Because now it creates about 2 ETH per block right now. And so you can see this projected max supply. It's actually moving up, which is pretty crazy. And to date, we've burned 17,000 Ether. So if you actually pull up a calculator here, let's just pull up a calculator and see how much money that is. So let's say 17,000 627 times what's the Ether price? $3,121. Let's see, 1, 2, 3, 4, 5, 6, $55 million worth of ETH. Not too bad for less than a week. Less than a week, we burned $55 million worth of ETH supply. Awesome. So, speaking of ETH, I did see a tweet from Raul Paul the other day. Go check out this interview for sure. But he's talking. He continues to sort of show his cards and get even more bullish about Ethereum asset itself, or Ether, basically calling it the greatest trade. All right. And so I'll play a clip of this here on my screen. Definitely go check out Raul over at Real Vision. And I'm going to see if I can actually play this from my speaker here. I've kind of messed up my audio routing. Normally I can actually take the audio out of my computer and play it straight to the live stream, but now I'm going to have to use this sort of bad method of just using the microphone. Hold on.
I released Global Macro Investor last Monday. There was an article buried there. It was only about 6 pages long, and it was entitled "The Greatest Trade." And it's just Ethereum. I think it's a better setup in Ethereum. Well, it certainly was by Monday, but it still remains. than March 2020 was for Bitcoin. And basically, and without giving away the full article, because I think I'm going to put it on Real Vision Pro, basically, there is 13% all the free floats of Ethereum available. Everything else is being staked, blocked, and hoarded. They've just made the supply more difficult. So the supply is lower. The Ethereum that is in free float is falling every day. And now we've just got the 1559 token out of the way. Most people are going to start staking the ETH that they hold. And there is no ETH available. And demand is going exponential. Exponential demand meets fixed supply equals exponential price rise. One of the best setups I've ever seen.
Yes, that's pretty crazy. So basically, he's saying the situation at hand for Ether right now is one of the best setups he's ever seen. It's one of the best trades that he can possibly think of because of what's happened with ETH. We've got the move towards proof of stake. We've got basically ETH being locked up. We got ETH being burned with EIP in 1559, and we're starting to see exponential demand for the Ethereum network with decentralized finance, with NFTs right now, with all the crazy innovations that are coming down the pike for blockchain technology, and Ethereum being the leader, and in the smart contract platform, World Computer, we've got layer 2s on top of Ethereum now, and coming out even more. That's just the craziest setup that he's ever seen for something to absolutely explode in value. So, it's pretty nuts. So I figured I would share that with you all. So I also watched a couple of interviews with Raul lately, where he's still kind of holding firm to his price target of $20,000 per Ether for this cycle. So I think the last I checked, he projected this cycle going on into next year, and that is still his firm price target. So I think it's probably plus or minus, some amount for sure, but that's still his target. He hasn't relented on that at all. So another, talking about the infrastructure bill, a couple other ways to think about this, right? Even if this passes with the language as is without any revisions, we now have to sort of accommodate this in the United States with crypto. There's something to think about here. People talking about this is basically crypto has arrived now. We didn't have situations before where crypto is basically holding up major laws getting passed in the United States, all right? Or bills. I don't know bill and law, the difference, right? But what I'm trying to say is legislation here. So basically, we haven't seen like crypto really holding up major legislation. We haven't seen times where basically crypto has to where people so much attention on crypto where essentially. What I think is really good is you have the situation now where people were trying like, oh, let's just throw this thing in here on crypto, and then boom, it kind of blows up in their face. And you have so many people that didn't realize that, oh, this is actually a lot bigger deal than we thought. Okay. And so if basically the crypto people come back with a vengeance if this passes and we start seeing more, push for this to get, changed in the government, that it really is a turning point of crypto's sort of arrival moment, that it was now being taken very seriously at the at the legal level. So at the end of the day, I do think that regulations are somewhat inevitable for cryptocurrency, and we do want regulatory clarity on this long term. All right, I'm not saying I want cumbersome regulations. I'm just saying, being a realist and saying I think that the regulations are an inevitability long term. But the last thing we want is basically really thoughtless regulation to get jammed in with some other major process where it sort of just gets railroaded. You know what I mean? And now we have to sort of work around this just ridiculous language. So in the one sense, it's good for crypto because it's now at the center of the conversation. More people are realizing they actually have to take it seriously. It's not just this like, people aren't thinking about it as this scam anymore that's kind of got a bad rap over time that's only used by criminals, drug dealers, all this type of stuff, dark web. But they're now forced the reality that there are tons of people doing this. It's a multi-trillion-dollar industry. And at the end of the day, like it's within the incentives of the United States to support this, because crypto is an industry that has incentives for the entire world to adopt it. I mean, just what's the name of the game with technology? Better, faster, cheaper with decentralized finance. We're talking about ways to increase GDP, to increase tax revenues, to increase innovation happening within the United States, all that type of stuff. The rest of the world sees these incentives. They're going to, gravitate towards those. And if the U.S. just decides to, create this language that makes it impossible for Americans to really jump on this train, then, it's bad for the U.S. And so that's why long term, I'm just not really bearish on this. I think short term it might be a little bit of a hiccup, but I think it's going to get worked out. Somebody says crypto is not going to die. Only American whales are going to die. Somebody just moved to Europe. So could we look at historical events on how they will act with regards to the infrastructure bill? Say, how did they approach a situation when the internet started and became mainstream? Yeah, it's a good question. I don't have good examples of that off the top of my head. I've seen some thoughts rolling around. I think the problem is it's so different when you're talking about internet just being transmission of information versus financial-based technology when you have all these tax code around it. That's what makes it so easy to just quickly change the game, is because you already have so much tax law that you can now say, well, this tax law applies to these people. You know what I mean? Like, there wasn't necessarily a good case to say, because you're using the internet, now you have to report, there's not, that wasn't, when the internet first started, you weren't necessarily transmitting money around, you're just transmitting information around. So I don't think anybody in their right mind is like, now we have to add all this tax code if you get on, I don't know, like AOL Instant Messenger or something like that. Like, there's not a really clear way to regulate that. Somebody says ETH 4K today. Yeah, I'd be happy with that. So it says right now, regulate crypto out of existence with infrastructure build? No, I don't think so. I don't think we're at a case of regulating crypto out of existence. So this is, correct me if I'm wrong, but if Ether is designated as a security, you would then have to be an accredited investor. Wouldn't that have a profound effect on the use of Ether? I'm not really an expert on the law here. I don't think that Ether is going to be viewed as a security. I think we've widely, treated Ether as a commodity up to this point. Somebody says apparently we can't have anything nice anymore. Somebody says, will crypto mining be banned in the U.S.? I don't think so. At the end of the day, we always see... at the end of the day, we have to see what the final language is, because we did see some revisions come back that excluded proof of work mining and also external wallets. Okay. So we'll have to see if that language stays as is or if it changes. So Mrs. Regulations are necessary for long-term adoption. I don't think they're necessary, but I think they're inevitable. But like I was saying a second ago, I do think they are inevitable, so I'm realistic about that, but I just want the regulations to actually be considered and not thoughtlessly grafted into a bill that doesn't really, that deserves as actual time and attention as opposed to how it's being taken care of right now. So we'll have to see what happens. I'll update you all about this tomorrow. I'll be checking in on this throughout the day. So make sure you subscribe to the channel, turn on notifications when we go live tomorrow. As always, that's all I got for today. As always, smash that like button down below. Subscribe to the channel if you haven't already. That really helps these videos out so the more people learn about blockchain. If you're as fascinated with technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want the next step, or hey, maybe you want to take a master shortcut entirely, I actually become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. You'd have to be an expert to get started today and help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.